On July 10, 2025, Bitcoin didn't just break a record. It smashed through $118,000, sending shockwaves through global markets. The world watched in awe as the price ticker raced upward, eclipsing every previous milestone and rewriting the rules of what's possible in digital finance. This was more than a headline. It was a moment that captured the imagination of investors, skeptics, and everyday people alike. This wasn't a slow climb, it was a surge, powered by a tidal wave of institutional capital. The momentum was unmistakable. Billions of dollars flowed in within hours, as hedge funds, pension managers, and global banks scrambled to secure their share of the new digital gold. The energy on trading floors was electric, with every tick upward fueling a sense of urgency and excitement. The catalyst? Spot Bitcoin ETFs, finally approved after years of regulatory battles, opening the doors for Wall Street's biggest players. This long-awaited green light from regulators was the spark that ignited the rally, transforming Bitcoin from a fringe asset into a mainstream investment vehicle. Suddenly, the world's largest financial institutions had a clear, regulated path to participate. For veteran investors, this is vindication. After years of skepticism and volatility, their conviction in Bitcoin's potential has been rewarded. Many who weathered the storms of previous cycles now find themselves at the forefront of a new era, their patience and belief finally paying off. For newcomers, it's a front-row seat to a financial revolution. Young investors, tech enthusiasts, and first-time buyers are witnessing history unfold, realizing that the barriers to entry have never been lower. The excitement is contagious, drawing in a new generation eager to be part of something transformative. The conversation has shifted from if to what's next. Bitcoin is now a globally recognized store of value, a staple in elite portfolios. Across boardrooms and investment committees, the question is no longer about legitimacy, but about strategy and allocation. Bitcoin's presence in diversified portfolios is now seen as prudent, not speculative. This rally feels different, more stable, more mature, and built on institutional concrete, not retail sand. The foundation is stronger, with deep liquidity and robust infrastructure supporting the market. Analysts point to a new era of professionalism and discipline in crypto investing. Volatility has dampened, signaling a market that's growing up. The wild swings of the past have given way to steadier growth, as sophisticated risk management and broader participation help smooth out the ride. For many, this is a sign that Bitcoin is entering its next phase. Bitcoin's story is no longer just about tech or grassroots. It's now told in boardrooms, Congress, and corporate strategy sessions. Policymakers, CEOs, and institutional leaders are all shaping the narrative, debating its role in the future of finance and the global economy. The world is finally waking up to Bitcoin's roar. As the sun rises on a new financial landscape, Bitcoin stands tall, not just as a symbol of innovation, but as a force reshaping how value moves across the globe. To understand Bitcoin's rally, you need to understand the ETF, an investment fund traded like a stock, tracking assets like the S&P 500, gold, or now, Bitcoin.
Spot Bitcoin ETFs, launched in early 2024, are game changers. They hold real Bitcoin, not just paper claims. When you buy a share, the fund buys actual Bitcoin, creating real buying pressure.
Before ETFs, institutions faced technical and regulatory hurdles. Now, they can buy Bitcoin as easily as any stock.
This bridge between traditional finance and crypto has unleashed a flood of capital.
The ETF isn't just a product, it's a paradigm shift, legitimizing Bitcoin for the world's biggest investors. It's transformed Bitcoin from a niche asset to a global institutional-grade investment. The $118,000 price is a direct result of this revolution. Simplicity and safety have finally unlocked Bitcoin's true demand. The numbers are staggering. Spot Bitcoin ETFs have attracted over $10 billion in their first quarter, and now manage nearly $150 billion.
BlackRock and Fidelity lead the charge, holding hundreds of thousands of BTC for clients. This is Wall Street's stamp of approval.
Even on quiet days, ETFs absorb hundreds of millions in new investment, creating relentless demand.
With Bitcoin's fixed supply and ETF buying, it's classic economics. Soaring demand meets limited supply, and prices skyrocket.
This isn't hype, it's a structural shift. Institutions are making long-term commitments, not just dabbling.
Bitcoin is now a permanent fixture in diversified portfolios.
The river of institutional gold isn't a passing flood, it's a new financial climate. This is the foundation for a maturing, resilient market. Bitcoin's ascent is built on deep institutional bedrock. The 2021 bull run was wild, driven by retail hype, stimulus checks, and meme mania. It was a time when social media buzz and viral trends sent prices soaring overnight, and everyone from college students to first-time investors wanted in on the action. The excitement was palpable, but so was the risk, as fortunes were made and lost in a matter of days. Volatility was the norm, and the crash was brutal. Many who jumped in at the peak saw their investments evaporate almost instantly. The market was unpredictable, and the emotional roller coaster left a lasting impact on retail investors.
In 2025, it's a different story. The landscape has shifted dramatically, and the energy fueling this rally is far more measured and strategic. Institutions, not retail, are driving the surge to $118,000. Major banks, hedge funds, and global asset managers are now the primary players, bringing a level of professionalism and discipline that was missing before. The capital now comes from asset managers and pension funds, not individual traders. These are organizations with long-term horizons, investing billions rather than thousands, and their involvement signals a new era for Bitcoin.
Volatility has dropped to a 2-year low, proof of a maturing asset class. The wild swings of the past have given way to steadier growth, reflecting increased confidence and stability in the market.
ETFs have made Bitcoin accessible to everyone, democratizing exposure and bringing in conservative investors. Now, even those who once viewed crypto as too risky can participate through regulated, familiar investment vehicles.
Financial advisors can now allocate Bitcoin like any other asset. Legitimacy and stability are here. This mainstream acceptance is transforming how portfolios are built and managed.
This rally is about strategic, long-term demand, not short-term speculation. The focus is on sustainable growth, with investors looking years ahead rather than chasing quick profits.
Bitcoin is finally fulfilling its promise as digital gold, held by the world's most important financial players. Its role as a store of value is now recognized by the very institutions that once doubted it. The shift from retail frenzy to institutional adoption is why this rally is built to last. The foundation is stronger, the players are bigger, and the vision is long-term. This is a permanent revaluation of Bitcoin's role in the global economy. The transformation is profound, and the future of finance is being rewritten before our eyes. Why did Wall Street finally embrace Bitcoin? The answer is a powerful mix of client demand, regulatory clarity, and the undeniable lure of profit. For years, traditional finance kept its distance, wary of Bitcoin's volatility and uncertain legal status. But as the landscape shifted, so did the priorities of the world's biggest financial players.
Clients wanted safe, easy Bitcoin exposure. Spot ETFs delivered exactly that, offering a regulated, familiar way to access the world of crypto. Wall Street moved fast, eager to meet this new demand and capture a share of the growing market.
Bitcoin is now seen as a macro asset, a hedge against inflation, currency devaluation, and geopolitical risk. In boardrooms and trading floors, it's discussed alongside gold and government bonds as a serious portfolio diversifier.
In a world of rising debt, persistent inflation, and shaky policy, Bitcoin's fixed supply is a compelling alternative to gold. Investors are drawn to its digital scarcity and independence from central banks.
The ETF flywheel effect is in full swing. More inflows mean more Bitcoin buying, which drives prices up, attracting even more investors. This cycle has created a self-reinforcing momentum that's hard to ignore.
Wall Street CEOs who once dismissed Bitcoin as a passing fad or even a fraud are now racing to be the biggest holders. Their public statements have shifted from skepticism to enthusiasm, signaling a major change in attitude.
Corporate pioneers like MicroStrategy and MetaPlanet have set the standard, inspiring others to follow. Their bold moves have shown that institutional adoption is not only possible, but profitable.
Corporate adoption and ETF inflows have created a narrative too powerful for even the most conservative players to ignore. The momentum is building, and the financial world is taking notice.
Wall Street's embrace is about more than just profit. It's about resilience, value, and adapting to a new era. Bitcoin has arrived, and the titans of finance are all in. As Bitcoin broke $118,000, the internet exploded. Celebration, disbelief, and FOMO everywhere.
Hodlers flaunted gains, memes went viral, and retail investors rushed in, fearing they'd miss out.
The digital air was thick with excitement, astronaut memes, laser eyes, and record YouTube views.
Newcomers are piling in, adding to the institutional momentum.
But not everyone's euphoric. Some warn of overheating and the risk of a pullback.
The conversation is more mature now. People talk ETF inflows, BlackRock's holdings, and corporate strategies.
Retail isn't just chasing hype, they're digging into fundamentals.
This blend of excitement and sophistication defines the new digital town square. Despite the euphoria, risks remain. Interest rates, regulation, and market volatility could all shake Bitcoin's ascent.
A hawkish Fed could pull capital away from risk assets like Bitcoin.
Regulatory uncertainty is always lurking. Future political shifts or new rules could change the game.
The speed of this rally could trigger sharp corrections, even with institutional backing.
If institutions pull out, ETF outflows could create selling pressure.
Key support levels will be closely watched if there's a pullback.
Navigating these headwinds requires a long-term view. Volatility is part of the journey.
For prepared investors, these are just factors to monitor, not reasons to panic.
Institutional adoption and regulatory clarity have built a stronger foundation than ever. Bitcoin's resilience continues to attract believers. A surprising force behind Bitcoin's rise is the political shift in Washington.
The pro-crypto Trump administration has made the US a global crypto capital, fueling optimism.
Congress is pushing pro-crypto legislation like the Genius Act, creating regulatory clarity.
Trump media's plan for a massive Bitcoin reserve and a blue-chip ETF ties politics directly to Bitcoin's success.
Political backing de-risks Bitcoin for cautious investors.
The move from regulatory uncertainty to active support is a game changer, making innovation and capital flow easier.
Washington now sees Bitcoin as a strategic asset, cementing its place in finance and politics.
This is paving the way for Bitcoin's next chapter. Breaking $118,000 isn't the end. It's the start of a new era for Bitcoin.
The question now is how deeply Bitcoin will integrate into global finance.
With ETF floodgates open, capital from the world's biggest players will keep flowing.
Bitcoin is becoming a core holding, reducing volatility and boosting its reputation as digital gold.
Corporate treasuries are adding Bitcoin, supporting its value as a global reserve asset.
Innovation and a maturing ecosystem will bring new products and more liquidity.
Challenges remain, but the foundation has never been stronger. This is a paradigm shift.
We're witnessing the dawn of a new age. Bitcoin is a cornerstone of modern finance.